Well, it looks like the Motley Fool can now acknowledge that AMC had a decent quarter. Relatively speaking, it still needs the rest of the movie lineup scheduled for this year to come through just for the company to tread water. Any hiccups could derail whatever chance the movie theater stock has at recovery. And that just goes to show how wrong the Motley Fool has been over the past year, basically calling for the bankruptcy of AMC stock. That's obviously not the case, and you are seeing somewhat of a change of tone even with the bears on AMC stock. Now, that is not going to be the point of this video. I thought that was pretty funny to point out for you guys. The point of this video is going to be, yes, AMC stock is going to squeeze, in my personal opinion, in June. I briefly want to go over essentially why I think that is the case and talk about where we are currently at, go over the day's update, all of that. But also I want to go over how you could potentially set up now to trade the Moass, because premiums are pretty cheap and it does offer a very attractive risk to reward kind of profile for some of these options. And I kind of want to go over what I have and how I plan to trade it. So that is going to be the concept of this video. If you guys find value out of it, hit the like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. Get your free stock as well with Weeble, Mumu, and Public. If you guys want to come trade with me live in real time as well, get access to all of my trades as soon as I make them, as soon as I sell anything, as soon as I buy long-term shares and whatever company it is. That is your way to do that. Link down below in the pinned comment. But first things first, if you guys don't know about the executive order, that is the main thing. That is the whole premise of why I do think that AMC stock is going to squeeze. And I'm sure you guys do know about this, but in the past two rallies that we have seen for AMC stock, it all came down to the executive order behind the scenes. And this executive order, long story short, it makes it so hedge funds cannot use Chinese securities as collateral, which was even a big deal back then apparently, because every time the executive order went into effect, that's when AMC stock rallied in January and then rallied in June. It was put on a 365 day essentially layoff period, for a lack of a better word. It went out of effect for 1 year. Well, it's coming back into effect on June 2nd and June 3rd as long as they do not extend it. And I think there's a lot of other things they're worried about right now than extending this executive order. I think it's kind of something that should be put on the back burner right now. So I think it will go into effect again. But last time it went into effect was June 2nd. And what happened to AMC? We went up 95% after already rallying quite dramatically before then, in likely anticipation of this executive order actually going into effect. And what happened back in January? Well, the same exact thing. Executive order went into effect. Trump had an executive order 13959, and Biden has executive order 14032. Same exact thing concerning Chinese securities and using them as collateral. Now, the only difference now comparatively to January or June of 2021, only difference in my personal opinion, is the value of securities has went down dramatically. Bond market, stock market, everything has went down. So to try to service the same margin call, let's say a hedge fund got $1 billion margin call back in June, it was a lot easier to pledge securities as collateral because those securities were valued a lot higher back in June, right? Stock market was basically hitting new all-time highs in January and in June. Well, what about now? It's totally different. The NASDAQ is still down even after today's move to the upside of about 1.5% last time I checked just a couple of minutes ago. The NASDAQ is still down 26%. It's still the worst year since 1939, the first year World War II actually started. It's not been a good year. So that same $1 billion margin call is going to take a lot more securities as collateral to be serviced and to not have to cover on those short positions. Now you add into the fact that they cannot use Chinese securities as collateral, and you've seen a lot of hedge funds over the last year purchasing a lot of Chinese securities, some well-known investors purchasing these Chinese securities. Well, it's going to be a big problem to service these margin calls, a very big problem, and I think it's going to be pretty hard to service them in general, I think there's going to be potentially a lot of shorts that are forced to cover, and the short interest is very, very high at the current moment, sitting at about 22.39%, 115.4 million shares that are sold short, cost to borrow max at about 4.38%, utilization at 100%, and days cover sitting at 3.23. Free float out on loan is 31%, meaning the shares out on loan 159.81 million. So potentially we could have as high as 31% short interest if these shares out on loan do actually go out and short AMC stock, which, considering what, these hedge funds like to do around key events, it would not surprise me to see the short interest go to about 30% before this executive order does actually go into effect. Now, what you tend to see the couple of days or couple of weeks before the executive order actually does go into effect, you tend to see the stock actually start to rally in anticipation of that. So if the executive order goes into effect June 2nd, June 3rd, then I would expect at least the back half of this week to end on a positive note, next week to be positive, and then the week after that is going to be the executive order week, and it would not surprise me to see a similar move. And really, the day the executive order actually goes into effect is the day we have the big green day. Back here in January, it was a 301.21% positive day, going from an open or a low of $11 per share up to a high of $20.36 per share. Same thing back here. June 2nd, day the executive order went into effect, you've seen a solid ramp up into the executive order, and then you've seen a 95.22% positive day. We hit a low of $35.59 in the beginning of trading, and then hit a high by the end of the day at $72.62 per share. So even if we could get the stock back to $35 and then see a 100 to 300% rally, that would put us back into the $70 range. Or if we go to $40 and see a 200% rally, so on and so forth, you're going to be above even that June level. And I think this time could be much bigger, and I think it could have a much more dramatic effect just overall, given, like I said, the state of the markets and where the collateral situation actually is. And this time around, I think there could actually be a lot more option activity as well. This is a main reason why I've said in the past, I don't care if people buy, hold, sell. I don't care what people do with their positions, because heading into this executive order, heading into possibly another 100 to 300% day, possibly more than that, honestly, it could be much more than that, you will see a lot of FOMO buyers that do kick in, and a lot of people will flood onto the option chain when premiums are already sky high after you hopefully have already locked in your position and made a lot of money, and they will drive that exponential move to the upside. Now, for the next couple of weeks, you don't have anything too crazy for, May 27th, this upcoming week, this Friday, you have about 95,000 calls that are in the money, 4,000 calls that are out of the money. For the puts, you have about 18,000 puts that are in the money, 34,000 puts that are out of the money. But for June 17th, that looks to be the big day where a lot of institutional investors as well are placing their bets, and you can see the ratio here is absolutely disgusting. About 2,400 calls that are in the money, 201,000 calls that are out of the money, 102,000 puts that are in the money, 45,000 puts that are out of the money. So when the puts are in the money like this, and there's such a high amount, and they go out of the money, that is bullish, and that does drive a lot of buying power on the open markets. Same thing on the call side. When the calls are out of the money and then they do run into the money, that does also consist of market makers having to go out and buy shares on the open market. That is where you get a typical gamma squeeze, but a gamma squeeze also is fueled by the puts that are in the money that run out of the money. So a lot of bullish activity, especially for June 17th. And if we do go ahead and take a look at what the hedge funds have actually been buying as far as options, you can see a lot of these super far out the monies. Even the $20 strike is arguably way out the money. You need to see the stock pretty much double by June 17th. That's a pretty bullish bet. January 20th, 2023, 145 call. December 16th, $35 call. Another September 16th, $20 call. A January 2024, $50 call. You guys get the point. Another January 20th, 2023, 145 call. You guys get the idea here. You need to see a big move in a very short amount of time time to actually make money on these options. And if institutional investors are buying the stock in this much with 88% positive order value on a day the stock is down 4%, or over the past week 89% positive order value, $32.57 million worth, 103 orders total in the past week. The last time we seen that, the stock ran from right here, you guys can see, very obvious, from that low at about $12.90 per share all the way up to $35 per share. That's the last time you've seen this kind of bullish option activity leading into a rally. The hedge fund options tend to be a glimpse into what essentially they expect the stock to do over the next coming weeks, not necessarily what they expect the stock to do in that certain day, right? So a lot of this option activity is forecasted out to the next couple of weeks, specifically June 17th, and I think that is when you are going to see a pretty parabolic rally overall. So that's pretty much what you guys need to know. Ray Dalio, as you guys do know, bought AMC stock for the first time ever. Doesn't tend to throw money around just to waste it. Same thing with Citadel. They have doubled their net exposure via put, or not puts, but calls. They've actually decreased their put position by quite a lot, so they have doubled their net exposure to AMC stock. And overall, I think it's going to be very, very positive, especially if the markets do, for whatever reason, sell off into the executive order. That's going to mean less collateral to actually service those margin calls still, like we were talking about. Now, how I personally plan to trade AMC, and I do have some trades on the table here. I really do like the June 17th, the $20 calls. AMC stock, in my opinion, I think will get above $20 per share by the time the executive order actually does get implemented. And these options are really cheap relative to how AMC stock could move over the next coming weeks. I do believe I have about 3 of the June 17th $20 calls, and they're going for about $45 right now. If the stock, in theory, were to go to 100, these options would be worth $8,000 a piece. So I do think there's a very attractive risk to reward, but obviously this is not a guarantee. The stock might not squeeze. You live in a very historical market where things are very manipulative, but I do think this offers a very attractive risk to reward profile, because at the same time, I do think if the executive order actually goes into effect June 2nd and June 3rd, that's going to be a Friday. As you guys can see, that is the last day of these options right here, and I do think June 10th and June 17th could be bullish weeks following that, but specifically the week of June 10th. So to give yourself an extra week on top of that, I think could cushion any potential, fake out rally that you might see. So I really like these options right now. I think they are very, very attractive. Let me know your thoughts down below in the comment section. How are you guys trading this? Obviously, goes without saying, with shares, you just buy and you just hold until your heart desires, until you have enough tendies in your portfolio to make it worthwhile to sell out. I'm not going to tell you guys when to sell out. That is not my stance. I don't care who buys, who sells, who holds. I know people will be buying once the stock does go through this parabolic rally that I think will happen in June. So that is going to be all for this video. If you guys want access to all of my trades in real time, I'm probably about to initiate a new AMC position as well here after this video, if not by the end of this week, most certainly. Link down below in the pinned comment if you guys want access to that. Come join us on the live stream in between 10 and 11 p.m. Eastern Standard Time. Thank you guys for watching, and I will see you in the next one.